Hey everyone, welcome back to Fiscal Voyage. And today's video, we're going to talk about something a little different. We're going to talk about options. So I'm selling options now. I'm trying to get into a new vehicle of making income. So I'm selling options on dividend growth stocks and some growth stocks. But right now, I'm selling options on three stocks. I'm going to start with doing three different stocks every month, trying to get used to the option selling. So right now I sold three contracts, on one contract each on SYY, Nike, NKE, and eBay. You can see here SYY expires on November 15, Nike July 19, and eBay on August 16. You can see here I got $1.55, which is $155. For SYY, Nike, I made $1.06, so 106, and then 95 cents or $95 for eBay. And you can see here I sold some options before. I made some profits here. I have a few open that they're looking good right now. I am a little down on these new positions, these three here, SYY, eBay, and Nike. So I'm using the spreadsheet to keep a record of my option trades. So let's look at why I sold three or why I sold options on these three stocks. So first off, let's start with Nike. Nike here, fast graph, you can see here, first, one of my criteria is making sure the company is either fairly valued or undervalued and earnings are growing, as well as dividend is growing. So Nike's, you can see here, historically, earnings has been growing very nicely throughout the years. The COVID had a dip of 36%. But then it picked up very nicely at 123% in 2021. And then in the next few years, earnings are expected to grow at 5% and 13%. Another thing I look at is forecasting long term. Make sure earnings are continuing to grow. I need that to make sure I want to sell options, because you're buying 100 shares of the stock and at $91, or the option I sold was $82.50. That's $8,250 that I need to cut off if Nike gets under that strike price. But I'll probably roll if it does. But anyway, we look here and put the price, Nike is kind of fairly valued right here with a normal multiple of 24 is right there at 24. We're showing this time period. You can see here it's actually undervalued in the past 7-year average, where the average was 32 PE, and right now it's at 24. So it's undervalued based on the normal multiple. And what I like to look at also is Morningstar gives it a 4-star rating, and CFRA gives it a 3-star rating. So if Morningstar, another criteria I have for these option selling is making sure the fair value price is higher than the current price. So this is last price of March at $93. Is actually right now the stock is going for $91, so it's a little lower than this price here, but the fair price is at $29 there, and is a wide moat, so that's real good. So I like that. And you can see here they have earnings expectations growing CFRA here. If we open the the report here, they have 12-month price target of $95, and then 3 years projected earnings growth of 7%. And again, $92. This is market close of May 17. So this was Friday. So it's a little lower today, but again, is under the 12-month target. So we have three things telling us that it's undervalued, and also I'm selling the 82.50, so it makes it even more undervalued. So that's why. And then if it gets there, I'm gonna roll to maybe $78 or something, making it even more undervalued. And if we look at the chart here, we have a lot of support in this $90 range. We have support here and support here. The only thing I don't like, it looks like it's doing a bear flag right there. So if it breaks this trend right here, then it could go low as back to down here to $80. Around here, $82. So that's okay. That's why I sold this option for that. So but in the daily chart right over here, you can see how some bottoming tails. So this kind of buyers are stepping up. So hopefully you could take over this and get over that, and then it'd be easy win. The next stock I sold was SYY. So if we look here on fast graph, you can see here earnings are also expected to be higher at 8% and 10%. So if we do this here at $75, and I sold $70, So you can see here it's kind of like not near the fair value price of 64.50, but it's close enough. And if it does get down under 70, I'll roll lower, and that'll be a good price, because you can see earnings are expected to be almost at a double digit. And I do the forecasting for long term. You can see here earnings are expected to be 8.5% going forward. So that's great, and I'll probably get a 3% yield. So this is why. So right now the stock looks fairly valued to slightly undervalued. Now, if we look at some of the analysts, you can see here Morningstar gives it a 3-star with a wide moat, and CFRA gives it a 3-star. So if we look at Morningstar, they have a fair price of right here, $78. So it's under that. So I like that already. And then if we go to CFRA, they give it a fair price of or the target of $77, and we know we're under that $77 price target. And it has a doesn't give a projected earnings growth, which is fine, but analysts expect it to grow here in fast graph by 8 to 10% for the next few years. So this is why I sold cash secure put on Cisco Corp. Now if we look at the chart, you can see here on the weekly we have a whole bunch of moving average right under it, so this should become support. You can see at this week or this day when earnings was announced, it dropped 2 good red days, but it bounced right on these weekly moving averages. So I expected to have these moving averages to hold, and possibly bring the stock higher. Also here on the monthly, you can see the moving averages right there, the 13 and the 50 moving averages. So this is why I sold shares of that stock, SYY, and we sold it at $70. So $70 would be right here, and if it gets there and breaks $70 near expiration, I'm going to roll it and possibly get $65 or even $60. And you can see here we got a big bottoming tail on the monthly. So this is strong buyer support here around the $63, $64 range. So that's why I'm okay selling an option here, because I could just roll it lower and get premium. And if I do get a sign, it'll be a great price here around $64, $65. So that's why I sold. That's why I sold a contract on Cisco. And then the next one here, eBay. If we go to eBay, you can see here earnings are expected to be double-digit growth for this year, and then 7% for 2025 and 9% in 2026. So you can see here, even if it to revert back to a normal multiple of 13, we have a 17% annual rate of return at the current price or Friday's closing price. A nice dividend yield. It has been growing dividend. It's a new dividend payer since COVID, but it's been growing it, so that's good. And forecasting, you can see here, long term, analysts are expecting 7.5 to 8% growth. 3 analysts, so continued growth. So it is undervalued, and I sold the 47.50. And if we go to eBay at 47.50, which would be right around here, there is support here around $48, but I'm okay, because the thing is, right here, you see here in the daily, there's a big gap. This one where earnings, it had a huge gap here from $44 to $47. So possibly they want to come back here to fill the gap here around $45 and then bounce back. But if I sold at 47.50, which would be around here, and if it gets there and I had to roll it over, I could get under the $45 or get 45, and that should have a nice bounce here at this price, because it makes the stock even more undervalued. As you can see here with the fast graph, the stock is undervalued. And we go to the mass chart, you can see here the stock's been undervalued most of this time and just continued to grow earnings. A step back here after COVID was extremely overvalued, and that's why the price had corrected. Now it's extremely undervalued, so that's why I sold contract on eBay. And now if we look at the analyst reports, you can see here has a 3-star rating and a narrow moat for Morningstar, and the Morningstar price or fair price is at $54. So right now it's under the $54. So that's good there. And the CFRA gives it a 4-star rating, and it's at price target of $57, and of course it's under that, so I like that already. And it has a 3-year projected earning growth of 8%. So overall, those are the reason why I sold these 3 contracts. So next month I'm gonna do another 3, not for these companies but for other companies, and just continue every month starting off with 3 contracts. So this made me about $360 for the month, and then hopefully my goal is to make 9 to 10 contracts to make $900 to $1,000 plus every month. Hopefully by around October or November I start to get to that level. I could do it now, but I'm just trying to get used to selling contracts. So I hope you guys enjoyed this video. Make sure to hit that like button if you're new to the channel, and subscribe to the channel if you're new, and hit the like button if you enjoyed this. And thank you for watching. I'll see you in the next one.